Hello, and welcome to this week's episode of Coinscrum's Meet the Founders. I'm thrilled to welcome Olivier Chevillon, co-founder at DFi Labs. Welcome, Olivier. How are you today?
Very good. Thank you very much.
Great. So thanks for joining us. So DFi Labs is a data and technology company and crypto asset manager. Can you just tell us a little bit about your background and how the company came about?
I'm very much a traditional finance guy. So I've been in finance for almost 20 years, always on the trading side, always on the quantitative side. And so my journey into crypto is very much a journey from a guy who's been doing data and finance for his whole career, who's always been very passionate about any innovation, and who found something which matched kind of all his interests. A new medium, a lot of data, a lot of opportunities, and something where he could apply everything that he's learned throughout his career and try to shape something new and something very exciting. So that's the genesis of DeFi Labs, my journey through finance.
So when did you first hear about Bitcoin, and what was it that kind of most attracted you when you came across it, being a traditional finance guy?
So because I was a traditional finance guy, I heard it in 2012 or so, and my first reaction was, this is a scam. And so I'm very happy not to be involved in any capabilities in this. And it stayed very much the same for a while. And then what brought me back to cryptos was very much blockchain, of which I was like a massive fan. And so I started to code in Solidity, which is one programming language for blockchain. And because I was programming in Solidity, then I discovered a lot of the data which were available in the blockchain. And then I thought, you know what? In my daily job, I'm doing coding on a shitload of data and trying to predict what will happen. Here I have even more data on something where I have a lot of interest. So why not try to make it happen in this space? And that's very much how I view it. And this was like 3.5 years ago. So I've been in this journey for a bit more than 3 years.
Yeah, I think it's a pretty common kind of journey that people have often come across this quite early and then dismissed it. Why do you think that is? Is that the people just don't generally go and take a deep enough dive to understand how the technology works and the implications of it? What was your kind of, why did you initially just dismiss it outright as a scam?
For one, I didn't understand it.
Mm-hmm.
For two, I didn't take the time to understand it. And when you are in traditional finance, you are used to things having proven themselves throughout time. And everything which is too good to be true is too good to be true for a reason. And so then the question is this because lack of liquidity that it's too good to be true, or is it just because it's a scam? Then this is a good question that you need to ask yourself. I didn't have time to dig into it. And so by default, I guess I took the shortcut of saying, this is a scam. And I think Jamie Dimon was very much in this camp for a while. So I guess I was not the only one.
No, definitely not. Definitely weren't the only one. And that is definitely a common theme. But I think that is a lesson to everyone that you come in, you know, the old adage of do your own research is I guess, critical in this space. And, I think the first step often is reading the Bitcoin white paper and really getting your head around the mechanics and then going from there. So maybe a lesson for other people watching if they're just getting into this afresh. So, you come from a very strong, as you said, a strong background and a long career in traditional markets. What would you typically, prior to setting up DeFi Labs, what would you typically been focusing on a day-to-day basis? What were your kind of key areas of expertise?
Data.
So purely on the data side.
I mean, what I was doing was creating strategies based on data. So sourcing a lot of data through data scouts like Noi Data, like Eagle Alpha, and then once you had data which were traditional or alternative, then creating a certain number of features, reading a lot of academics, talking to a lot of people to create new features, then working on creating, smart pipelines using machine learning, and then with the view of setting up a stable pipeline which enables you to generate alpha on a fairly constant basis. And so that was really reading a lot, searching for data, and creating pipelines which are fully systematic. That's very much what I was doing. And that's what I found so interesting in the crypto space, because there's so much data. Everything is new. So it's like there's a lot of people coming with, sometimes great ideas, but poor execution. And so there's a lot of value that you can extract from a background in traditional finance, because it saves you a lot of errors. And in trading, I think my first boss always told me, it's not about making money, it's about not losing money. And if you're avoiding many traps, then definitely in crypto, you're very close to being a very good product. So what I found very interesting is a lot of data, a lot of passionate people need a universe which needs to step up to the standards of traditional finance. We need to be able to communicate itself to traditional investors in a more traditional way, but so much to create. And so I always felt myself a bit like as an entrepreneur, and I don't think there's much better as a universe, as an entrepreneur, but also as an investor, because there's so much to be built, be it on blockchain or on cryptos.
So what did that look like when you first looked over the fence? Obviously coming from a very traditional background with very mature market infrastructure, although there might be a difference in terms of how data is consumed in the crypto space and accessed, and because it's generally very freely available, which is obviously a big plus side. But in terms of that broader market infrastructure, what sort of limitations have you found versus traditional markets, and how are you overcoming those?
I think in the traditional markets, you've got what you call, traditional data. So those data, they are very clean. In the crypto space, you take 10 different exchanges. You don't exactly know what is the liquidity. The order books are comme ci, comme ça. So the quality of the data is much lower. It's not unified. It's not clean. That's point number one. Then secondly, in terms of what is the length of the data which is available to you, if you're looking at cryptos, where would you say crypto start? Bitcoin started. Did it start in 2009? Did it start in 2012, 2015, 16, or 2018, 19? How far back in time should you be looking at? The question of how long your time series are is also very different from the traditional space, where the length of the data that you're looking at and the quality are much higher. So the number of assumptions that you have to make on those data is much lower, which means that when you're modelizing, it makes it a lot easier on the traditional space. Here you have a lot more assumption that you need to clearly state when you're doing it. So I think in terms of the data which are available, it's very different. In terms of the infrastructure, it's also very different, because if we take just a simple example, but in the equity space where I come from, you want to execute through VWAP, TWAP, or whatever. I mean, it's been coded 50 million times. You look at the crypto space, I mean, on top exchanges like Binance, you don't even have those options. It's just like you buy at the offer, you sell at the bid, or you just stay on the bid. I mean, those are like kind of, I mean, it's very immature in terms of offering. And if you look at the number of scams which have happened, lack of security of the data, of the keys, of kind of everything, then again, you're at levels which are not acceptable for traditional investors who are going to put a lot of money at risk. So everywhere there's like a couple of key key issues for the whole industry to solve before being able to be fully mainstream to all type of investors. And I think that's what makes this space at the time so, I mean, fantastic.
Yeah, and we're seeing things rapidly mature. Obviously, you know, connectivity APIs are becoming a bit more standardized. Exchanges are kind of choosing to license in matching engines and things, so the kind of robustness of the technology is improving. So I guess it's getting there, and the motivation's there to do it now because of this broader interest, and many firms such as your own that are stepping into the space. So if you were looking, say in a traditional market, you selected a new asset class that you hadn't previously traded, and you were looking to kind of start applying some strategies to it. How, in terms of back testing, how far back would you have typically gone? And then what you've just said there about, you know, when do we consider data in crypto to when was its genesis of being, I guess, robust and mature? What are the differences there? You know, how much can you rely on back testing in crypto markets versus traditional markets?
I think that's a very good question. It's I mean, this brings you to, I mean, you need to have a consistency in terms of data so that, I mean, you need to make some assumption as to what is the format of your data, what's their distribution, what's the stability of those distribution. All those things, you need to understand them before doing any modelization. And so the way we look at it, I mean, we initially started by taking the full sample. I mean, the full sample, we used a cut in 2017. And then what we've done is, because we don't believe this is very correct, because this led to very inbound classes in terms of, I mean, we had a lot of very positive and very few negative, or the contrary on some other cryptos like ETH. So what we moved to using the full sample, to using a certain number of rolling windows, so that what we have is we use different lengths of memory on which we train our model, and then we stack all those models, so we add them together so that we have less dependency to one single point, and that all the memory is like 20 people voting together as to what they believe is the right outcome. And so we're using rolling windows, and we're stacking them so that it's a vote between a certain number of models which are all trained on different rolling windows. That's how we've decided to do it, because we believe this is more the reality of the investors which are in this space, where most of the people who are involved nowadays have not been here for 15 years. They have not been there for 5 years. They have been there for a year, 2 years, maybe 3 years. Mm-hmm. And so those guys, what we are trying to extract is how they think. And hence, that's why we're using rolling windows, which more reflects the memory of a given type of investor.
Sure. And how have you found being able to copy and paste kind of some of your existing prior strategies over into these markets, or how much customization has been kind of required to get things working?
I think it's been very different. because in the equity space, what you're trading, I mean, at least I was on the equity market neutral side of it. And so what you're doing is you're doing cross-sectional. So you're buying baskets and selling baskets. And roughly, you're more trying to get the alpha, so the outperformance of one basket versus the other, more than you're trying to guess what will be the trend for the next day. And so in the crypto space, you're much more in with one or two underlying, or I mean a basket of underlying, but you're very much trying to predict, is it going up or is it going down? But for one underlying. And so this is a very different way of looking at it. And I would say what I've done is really I've brought modelization that I was using. So for instance, I've described how we're using rolling windows with like on which every single rolling windows gets a model that we train, then makes a prediction. Then we have 10 models which all make a prediction, and then we average it. And so this is one thing that I brought. The other thing is like a focus on risk, which is, I think, the most important thing in the asset management in the crypto space, where you can make a shitload, but you can also lose a shitload. And losing a shitload is not going to be good for the industry, not going to be good for you. And so being focused on risk more than on returns, because you will get them if you get the risks right, is another key component. So understanding that it's not about maximizing return, but it's about maximizing more like return under constraints, which are more like drawdowns on a daily basis, on a peak to through basis. So understanding risk, this is something that I brought also from my days. And the last point is a focus a lot on the data, the quality of the data. So looking at different type of data, not only looking at price. And so when you talk to people, it's always about momentum and reversal, which is very true. I mean, those are key components of your decision making, but you've got plenty of other sources of data which do have a lot of value. I mean, you can think about the blockchain data, you can think about the sentiment data, you can think about other financial asset, you can think about impact of, I mean, DeFi or higher beta type of cryptos on the main cryptos and so on. So there's plenty of things, plenty of type of data that people should be looking at. And because in the equity space, you're always looking at new sources of alpha, new type of data, then this is something which was part of our DNA. And so trying to extract value from different type of sources of data, combining them, devising smart pipelines under certain constraint. That's what I've brought from my days in the equity space, much more than a model that I was using and that I copy paste on the crypto side.
Mm-hmm. So how have you found, I mean, what I've always thought, this is one of the kind of underappreciated features of these public blockchain networks, is the public availability of that transactional data on the networks, and people using that more and more to look at inflows and outflows of crypto assets and even stable coins to exchanges. Have you been applying that already? And are you seeing actual real correlations in terms of some of those inflows and outflows and influence on the price?
I think it's very important. I mean, sometimes you get the data and sometimes you find alpha, sometimes you don't. It might be because you didn't do it correctly or because there's no value in the data, but it's very important that you constantly look for it. In the equity space, you have all the data scouts, and I think in the crypto space, it's not yet the case, but it makes even more sense because people tend to use the same type of data. There's a lot of value on the non-traditional, non-price and volume type of data on something which is like very open source. I mean, the users. That's, for instance, something that you can get easily. I mean, there's like a lot of information. I think, for instance, guys like Into the Block do great stuff. I mean, we developed some our own NLPs also, but I think there's a lot of people who are trying to bring knowledge that is available on other asset classes to it, to the cryptos, and it's very important to be on the lookout for it. And if you don't, you're probably going to, I mean, you can do very well, no doubt, but you're probably not going to be able at some point to keep on sustaining this kind of great return that you've been doing as the market matures. Mm-hmm. Me, my aim is to be not 2 sigma, but if I can already be 1 sigma and a half, like I'd love to be 2 sigma, like the hedge fund. I love to be a small 2 sigma. I'd love to be, I mean, some kind of baby renaissance, so baby burst or whatever. But those guys, what's very important, and that's my culture, it's about you're taking a lot of data, you're smarter on knowing what to extract, how to extract it, and then bringing value so that you can scale because you're able to extract more information that people are not looking at.
Sure.
That's what we want to do. I'm not saying that we're perfect, but it's definitely an ambition that we try to sustain as much as we can. And that's why our focus is very much on the data science side. And so talking to a lot of guys, I mean, we're at Station F, we talk to a couple of firms who are creating data or generating data to on the blockchain. And so, I mean, we believe there's a lot of value. We might not always be able to capture it, but I mean, some we get.
Well, it's a great ambition to have, and it's still very early in the game, so I'm sure it's all achievable. So just back to the company and DeFi Labs itself. So where are you domiciled, and can you just tell us a bit more about your team, your founding team?
Sure. I mean, we're based in Paris, and the idea was I've lived kind of all my professional life in the UK, but I came back a couple of years ago. And that's how I went into blockchain, because I wanted to code a blockchain, simple. And then the great stuff about Paris is there's like a lot of talent on the data science side. And so I met my co-founder at a hackathon, and then he's a Kaggle master. So we decided to, work on this project. And so that's 2 guys, one with a lot of coding experience and a lot of finance experience, and one guy who's like, a freak in terms of data and machine learning. And then that's how we started. Then what we discovered was that, it was very good because we were able to create great product. The only thing is, it's very easy to implement a strategy on the equity side, but on the crypto side, you need to be able to trade 24/7, no bug, nothing, because otherwise, well, it might be great on paper, but it's shit in reality. So what we added was like an IT guy, and so we picked someone who had like a lot of experience doing it for Societe Generale with Xetra, which is like DAX, which is like a big market. Mm-hmm. And so we added this IT side, so we become very robust. And once you start having like a great product, which is implementing properly, no fuck up all the time, then you start being properly a good product. And then the question is, where do you want to add to? And so the idea was, we had big ambition, and so we decided to make it to a company. Then we had like one guy with whom we had been working for a while, who decided to join us, and he had experience as a CEO of a crypto firm. And so that was kind of the core team. And then we've had the chance to have a certain number of, highly skilled data scientists who've helped us and who keep on helping us. So mainly guys from my engineering school, which is called NSAE, which is like the top one in France for statistics. And so, it's really like a data firm We've got quite a few data scientists, and that's the idea: creating a tech firm able to extract value from financial, or in this instance, crypto market. We're only focusing on cryptos because we can't focus on too many things.
Sure. And so what's your strategy? Are you currently just trading on a proprietary basis? Are you taking outside money? And so what are you ultimately going to be offering?
So the core of what we do is, it's really where a data firm who's able to extract value from data on the crypto space. So we don't have anyone to sell our product at the moment. So what we've done is, because we had great stuff, we've had a couple of fund of fund who've been interested in us. So crypto fund of fund, this one is doing nicely. And at the same time, a couple of friends, high net worth individual who were part of the network and who said, we love it. So, and we love it even more by the day. So, and by the end of the year also. And then afterwards, so that's the core of our clients currently. And because of my time in the traditional space, then we have like a certain number of relationships and people who will set up funds for us. And so the idea is very much, we are not yet aiming to distribute our product on our own. The idea is very much for us to have people doing all the distribution part and the running everything for us, and us being an advisor. So that's very much where our focus is. At a later stage, it might be different, but currently we don't want to waste resources on the wrong priorities. And for us, it's being the best product in the market, not being the product which is the most marketed in the market. We leave it to professional. That's it.
Okay. And we've recently seen the proposals for the new MiCA regulations out of Europe. So obviously being domiciled in Paris, in France. What does this mean for you? Does it potentially have a big impact? Is it beneficial? Does it not really affect you at this stage?
Well, my first comment will be, it's great. I mean, we're in an industry which, is constrained by how young it is, but we're also constrained by the lack of reglementation. If you're like a proper investor, you want, mature product. You won't find too many mature product, but you can find some good product. But you want them to be bulletproof, and you want the setup to be bulletproof. As long as we don't have this regulatory side to it, this market will, for investors, always be a dwarf. Mm-hmm. So I view it as a very, very positive step. Do I find it annoying? Well, you need to adjust, but for one, in life, you always need to adjust. For two, I view it very much as an opportunity. AMF in France is been kind of supportive to the whole industry, and it's our job to make the step up. And that's why in everything that we do, we try to be with professionals of the space. People whose responsibilities and whose experience is to do the things properly. And so I view it very much like as a big opportunity, knowing that we have strong partners and we are trying to do the best to be at the top standards, so that investors can tomorrow trust us, not only for performance, but for our products.
Absolutely. So I guess we need to wrap up shortly, but I guess back to the beginning, and you named the company DFi Labs without the E. So a clear reference to DeFi. I know that some people have said that with the MiCA regulations, maybe do need some kind of level of review or feedback from the industry, because there's potential for maybe stifling innovation across DeFi. Are you actively trading DeFi instruments at the moment? Is it experimental? How do you see that space maturing? Because obviously it opens up new opportunities, but then potentially new risks for trading firms such as yourselves with new ideas of flash loans and front running trades in terms of intra-block manipulation. Where do you sit on this at the moment?
Again, I think DeFi is a great opportunity. I mean, it's a new market in the crypto space because it creates a new type of asset that people might want to invest in. So as far as we're concerned, we have created products so that people can have exposure to the DeFi space. We can create SIM product, but we've also created stuff which are really focused on DeFi. So for us, we view it as an opportunity, and because we've had investors, showing interest for it. So we're here we've got the tech to develop the product. We just want to make sure that the clients get the product that they want on the SIM that they want. So for us, it's, for one, a great opportunity in terms of creating new products. And the second thing is, for us, all the decentralized autonomous fund and so on, we view it also like as a very interesting way of doing finance, very transparent, but which has its own type of issues. We are also looking at creating a decentralized autonomous fund so that we can also be part of this finance 3.0. And I think that's, again, I don't know if we will do it till the end, but it's definitely something that we want to be part of, because this is part of what's great about cryptos. You're here to try to invent things in such a way that they are safer, better, more transparent, and we want to be part of this revolution.
Absolutely, lots of interesting things will be coming up in the next couple of years, I'm sure. I'd love to speak more, but we've run out of time today. Really appreciate you joining us, and fascinating to hear about the business, how it's come about and what you're working on. If anyone wants to try and contact you, what's the best way for them to go about that?
Directly, because we love direct contact. So I will, my email is olivier@defilabs.com, but otherwise you can go on our website and easily get in touch.
Absolutely. Excellent. Thank you very much, Olivier. Thank you for joining us today, and wishing you and the team the best of luck and every success in the future. And hopefully we'll be speaking to you again soon.
Thank you. Have a nice day.
Thank you very much.